Thanks for your company this Thursday, the 3rd of December. I'm Jessica Ramir, market analyst with Bell Direct. Well, the Aussie share market is on for its third day of straight gains. The futures are suggesting a lift of 0.3%. Now, it comes as global equities closed mostly higher overnight after the UK became the first country to approve the Pfizer BioNTech COVID vaccine for use, with plans for it to be rolled out as early as next week. We saw UK stocks close 1.2% higher across the Atlantic, though. In the US, sentiment was a little bit more subdued. The Dow and the S&P 500 only rose 0.2%, while the Nasdaq fell 0.1%. It's important to remember, though, that US stocks are coming off one of their best months in over 3 decades, where the Dow Jones and the S&P 500 rose 11% and the Nasdaq closed 12% higher. In Australia too, remember, the ASX 200 was up 10% in November. That was its best monthly gain on record. But one of the reasons that we saw US stocks take a bit of a breather overnight was firstly that the President-elect Joe Biden said that he would not be immediately removing those tariffs brought down by Trump's administration onto China. And secondly, another reason for the slight hesitation on US equities overnight was that the economy added less private sector jobs in November than expected. There was plenty of movement on the commodity screens, though. The oil price closed is trading 1.4% higher to $45.17 US. The iron ore price up a massive almost 3%, continuing its bullish run. It's now at $134 US for the iron ore price, and copper has slightly eased from its record rally. The gold price is up about almost 1% as the safe haven US dollar has continued its decline. Now, what to watch today? Well, on the economic front, home loan data is out, as well as import-export data for October. Yesterday, remember, we learned Australia's economy officially snapped out of its first recession in 29 years as expected, but the economy grew 3.3% from July to September, and that beat expectations of just 2.6% growth. Now, remember, this is just for the September quarter and does not factor in the government's new budgetary support, and Victoria was also in lockdown. So next quarter could be another strong month or strong quarter for economic growth. So I'd be thinking about companies that will benefit from that. So thinking about banking, property, consumer spending stocks, as well as airlines, travel and tourism. As for actual trading ideas that could be worth a look, well, firstly, I want to say the upgrade cycle has definitely begun for stocks tied to economic growth. We saw Citi upgrade Cube's buy rating and target with a new $350 target. That implies 20% upside in a year. What's key here for Cube is that container volumes and activity is starting to pick up. The company also said it's expecting reasonable full-year profit growth, but didn't really quantify what that meant, though. If you have a look at Cube's chart, it is in quite a bullish stance at the moment, though. And UBS upgraded Worley Parsons, giving it a new price target. This is an energy and chemical company, and they gave it a new target of $14.43. Citi also upgraded Worley overnight with a new $14.80 target for WOR. And Bell Potter reiterated their must-haves champion stocks that will likely see earnings and share price growth over the coming years. Now, they include Amcor, Transurban, Challenger, Goodman Group, Netwealth Group, Brambles, CSL and Sonic Healthcare. And lastly, from a charting perspective, keep an eye on 3 stocks: Medusa Mining, Baby Bunting and Stanwell Coal, which are all showing strong bullish signals according to Trading Central. I'm Jessica Ramir with Bell Direct. Stay safe. Happy trading.